You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldanoilguy.com. Welcome to the show, Chris.
Thanks for having me, Jim. Pleasure to be here.
The U.S. dollar looks like it's ready to take another run for being top guy on the planet.
Yeah, it does. You know what? It's had a massive run really from early 2011, but last year we saw a massive run in the U.S. dollar index, and pretty much all of this year it's been consolidating in a very tight bullish pattern, which is known as a bull flag, and that usually signifies a halfway point for a actual trend. So if there's kind of that the theory that, you know, it's the shiniest pile of poo is going to shine, right? So the U.S. dollar, while all currencies and countries are having serious problems, the U.S. dollar looks as though it's the shiniest, you know, thing going forward. And I think we're going to see things unfold overseas, which are happening as we speak, that is going to cause panic in other currencies. We're going to see money flow into the U.S. dollar as just probably a temporary safe haven, and we could see a massive rally in the U.S. dollar index. And, you know, it's going to put some serious pressure on commodities, but I think we could see the U.S. dollar become the safe haven and really surprise a lot of people. A lot of people are thinking the U.S. dollar is going to collapse, but you know what? It could be the safe haven play going forward the next 6-8 months.
In fact, a lot of people have been predicting the collapse of the U.S. dollar for the last few years, but that doesn't seem to be happening.
No, it doesn't. And you know what? Really, since 2008 low in the rally, it's actually been forming a very strong basing pattern, which it broke out last year to the upside, and we've seen a nice rally. It's pretty much reached a level where it's a significant resistance level that's hit multiple times all the way back in 81 and all the way through 87, 89, again 98. There's a lot of this key level that it reached earlier this year is a long-term resistance zone, and it's just really consolidating there, and I think we're going to see it blast through, and we're going to see this the dollar continue in this bull market that it's in, and we're only halfway through it. And I think this last little bit is going to be very parabolic, where we're going to see just the dollar shoot up and rally for a few months, and we're going to see extreme gains in the dollar index. Also, people were saying the value of the U.S. dollar would go down because of all the quantitative easing where they printed so much extra money. So the U.S. dollar has retained and, in fact, gained value. It has, you know what, but a lot of stuff, when it comes to investing, it's not so much the fundamentals that really make the value, it's the perception of value people give it, and they feel confident with something, it means it has more value to them, they're going to pay more for it. So, yeah, there's been a lot more printed, you know, but the thing is, you see everything happening overseas with Greece and the euro and all this chaos happening. It makes the U.S. dollar just feel like it's probably a better safe haven, and people have been moving money into it for a while. And you know, it's just again, the shiniest pile is getting the attention right now. And of course, just a few months ago, there were noises that the Chinese yuan would want to make a move to become the world's reserve currency. But an almost 30% drop in their stock market over a couple of weeks, I'm sure, has shot a lot of that confidence down. Yeah, most likely, but yeah, that market was pretty inflated, and we really saw that deflate here. It's unbelievable, that 35% haircut in the index there. It's wild, the price action. Globally, like the stock markets, if you were to combine the stock markets and exclude the U.S., it looks as though all equities markets, including the U.S. though, are starting to get to this topping phase. We're starting to see markets on the verge of breaking down. The U.S. dollar isn't there yet. The U.S. Stock market isn't there yet. We're right on the verge. We're seeing the Dow, the S&P 500, the NASDAQ, the Russell 2000. They haven't broken any critical support levels yet. We're seeing international markets breaking down, starting to crumble. We're seeing key sectors in the U.S. market that have broken down, like industrials and transportation index. We're seeing things start to break down in the U.S., but the U.S. stock market is still holding up. It's just holding up by a hair. Eventually we're going to get this crack to the downside where we're going to kickstart into a bear market, but it hasn't happened yet. And of course, if the U.S. dollar continues to strengthen, I think it could help hold the U.S. stock market up, simply because investors will want to own U.S. stocks because the value they're still technically in a bull market. People are overly bullish in stocks right now, so they're naturally going to want to put their money in U.S. stocks. And with the U.S. dollar rising, they're going to also get that gain in currency value on top of it. So we could see still some higher prices in the U.S. stock market as we evolve into a topping phase and eventually go into a bear market later this year or early next year.
We'll have more with Chris Vermeulen right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Chris Vermeulen, his website, thegoldandoilguy.com. Chris, what's happening with the price of oil right now?
Crude oil has been, we've talked about this a few times over the last few months, Jim, and crude oil has been forming this potentially big double bottom formation, this big cup and handle pattern. Both are very bullish and point to upside prices. But what's happened here, it looks as though we've seen this sideways consolidation in the price of crude oil. It's been going on for several months now, and it's a fairly wide range, about 11% range from the top to bottom. We've just been seeing price trade sideways through this range, and a lot of people have been, I think, accumulating positions and getting prepared for a breakout to the upside. And we've been watching the energy sector stocks to make the move first. Typically, we see energy stocks move before the commodity. And that's the same with most resources, same with the gold and silver markets. And we just haven't seen any life in the energy stocks. And finally, it looks as though the market for the price of crude oil has broken down. It's flushing out all those people who have been accumulating, waiting for this massive breakout and rally in oil. All those people are getting washed out this week. We've seen a dramatic drop in price from around $62 a barrel all the way down to almost to $51 a barrel, massive drop, and it's really flushing the market out. And we're at the point now where crude oil is finally pulled back. It's at a key support zone here, which it looks as though it's trying to hold, but we're still not seeing any real life in energy stocks yet. So who knows what crude oil is going to do next, but we're really got to keep our eye on what the energy stocks are based around it, because we typically see investors move into the high beta plays based around a commodity first, and then you see the commodity start to move. And we just haven't seen that yet, so I think we're going to need some more time of these lower prices in oil before we start to see a potential bottom. But if the price here is broken, right now we're trading at the $51.50 per barrel. If the $50 per barrel level is broken, which is a pretty critical whole number, it's a critical support zone, then I think we could easily see new lows tested on crude oil. And with energy stocks underperforming, that seems to be the case at this point, that we're just having a pause in this waterfall type sell-off, and we're going to get the second half of this move all the way down to around the $45 or $43 per barrel in crude oil.
Wow. So, again, people are looking at the price at the pump and the price that they're paid at the wellhead. There doesn't seem to be much of a connection right now.
No, there's never a connection with those. It's the price of gas at the pump skyrockets for every tick up that oil makes, and oil could drop, $30, $40 a barrel, and the price of at the pumps doesn't really do anything. It's unbelievable how they can hold us ransom, the companies, the refineries, and keep us paying premiums.
Getting back to commodities, what do you think is going to happen with precious metals with pressure on international stock markets?
With certain, depending on how the fear and how things unfold, and if the U.S. dollar does make this big, sharp rally as the safe haven play as things unravel overseas, I think we could easily see gold and silver have a kind of a bit of a panic sell-off here, which I've talked about a few times in the past, and we could see down to the 1060 area for gold, which is about a 10 or 13% haircut from here. We could see silver drop, about 20% to here, down to potentially the $14 per ounce level. And I think that this is going to be the washout. If things kind of play out how I think they might, we're going to see the U.S. dollar spike up. We're going to see precious metals get hit pretty hard. And then we're going to see eventually a big shift in the financial markets in general. We're going to see the U.S. dollar probably eventually roll over and sell off. We're going to see massive rally in money flowing into physical safe havens, which will be like gold and silver miners. And we're going to see this massive shift. And of course, I think we'll see energy stocks do really well and crude oil eventually, but we really need to see this big flush and this big shift. Usually you get some of the biggest moves right at the end of a trend. And if you were to look at the price of gold in 2011, we had a massive rally. Price went parabolic in gold straight up. And that's kind of when everything shifted and we saw the markets turn. And so I think we're going to get that to the downside. A washout bottom is what I call it. Investors are very bearish on metals. They don't like junior exploration stocks. They don't like gold miners. And I think it's going to take one more flush down of 10 or 20 or potentially even 30%. They're just going to give up, flush the market out, and that'll give us our V-shaped bottom, and we could see a massive rally. And I think all this is going to start to unfold, in the next 5 or 6 months.
Chris, thank you very much for chatting with us.
Hey, no problem, Jim. Appreciate it.
My guest has been Christopher Vermeulen. His website is thegoldanoilguy.com. You're listening to HowStreet.com radio. Check out our popular YouTube channel, Talk Digital Network. You can find us on Twitter at TalkDigitalNet. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.